Good morning, guys. Good morning. Yeah, so my name is Tej, not Tega. Tej Kenel Kavor. And it's nice to be here. And so, yeah, we're moderating the first panel session, Africa's Digital Payments Race. So with me, I have Amandine, Leon, Shike, Edmund, and Hilda. Sorry, Imran in place of Edmund. So I would like them to introduce themselves. I'm starting from Amandine.
Hi. This is on. Hi, good morning, everybody. My name is Amandine. I'm the head of business at Paystack. Paystack is an online payments company. We were headquartered in Nigeria, but with a presence across the continent. I oversee all the non-product and engineering functions at Paystack, and I've been with the company for about 3 years. Before that, I was a fintech investor, so great to see a lot of familiar faces in the audience.
A round of applause, please.
All right, thank you. Good morning. My name is Leon Kiptum. I'm the country director for Cheaper Cash in Kenya, and also have responsibility for Tanzania as well. Cheaper Cash, as you may know, is a cross-border payments company. We're a fintech that focuses on cross-border payments. We are headquartered in San Francisco in the US. I've been with the company for about 18 months, career banker, been in the banking industry for over 12 years before I joined Betway, the gaming industry, and then Cheaper, which is a fintech. So happy to be here.
Good morning, everyone. My name is Imran Patel. I'm director at Verdant Capital, responsible for Francophone Africa, but my responsibilities allowed me to lead transactions across the continent in other countries as well. Verdant Capital is a Pan-African investment advisory firm. We're also an asset manager, having launched our first fund earlier this year, and look forward to working with the other members of this panel on this discussion.
Good morning. My name is Hilda Gaduya. I'm the country manager for Accelerex Kenya. So Accelerex is a fintech company that is focused on financial inclusion and also empowering businesses through mobile payments. And we do that by building the software and the channels that drive those payments.
Good morning, everyone. My name is Shikeba Shimi, and I'm the Chief Business Officer for Cellulant. I manage the South African and the Western African business for Cellulant. At Cellulant, we provide payment infrastructure and platform for businesses to be able to offer payment acceptance and payouts to their customers. So we're a B2B business. We have our customers as banks, fintechs, and merchants as well.
All right, so we're getting started. A few years ago, maybe 5 to 10 years ago, we didn't have the likes of Paystack or Flutterwave, or and these companies, we know how dominant they are in the payment space, alongside the others. So today's session, which talks about the digital payments race, it's not actually a race to the finish line or who gets first position or something like that, but actually signifies how the digital payments platform on the continent have progressed so far and how well they've done. And when you talk about race, for these players, we take into consideration how well they do regionally, not just in their independent countries. For instance, Flutterwave and Paystack from Nigeria have expanded to other regions. Same with MFS Africa, expanding to other regions across Francophone Africa. So the first question will be directed to Hilda and Imran. Just give me a sec. So yeah, as a dozen companies in the payments space raise significant rounds of capital looking to expand into each other's territories, both geographically and product-wise, and vie for market share, what do they need to show in the future that they are winning against their competitors in this payments race? Did everyone get that? Did you get that? Okay, yeah, so I think Hilda can go first.
Okay. We find that a lot of companies are growing, and of course, the footprint is important. At times, driven by customer needs, seeing opportunities that are not covered. But when I think about Africa and the problems that we are facing, I think what we need to be thinking about as fintechs is about impact and the problems that we are solving. So when we say how are we going to win, as we see the overlaps, they are going to happen. We cannot avoid that. But how we are going to measure success is impact, meaning which problems have we sized those opportunities right? Do we know what the markets need? And eventually, we chase after profits, after the numbers. We want to have bragging rights. How many merchants do we have? How many banks? The footprint. But I believe if we are going to say we have won in Africa, is looking at the problems that we are going to solve and the impact that we have. Are we saying that these many people are now fed? These merchants are now able to be empowered to do X, Y, Z. So I believe that is how we should measure success as we grow.
I agree with Hilda. Very well said. I think impact is very important, especially in the markets that we serve and operate, as well as the nature of investors' requirements and demands when they're investing in fintech, particularly in Africa and sub-Saharan Africa. But I also think one needs to continue to innovate in terms of product in order to fend off competition, but also address evolving needs of their clients and the markets. And of course, investors will also like to measure profitability along with scale, and if not profitability in the near term, some form of return to show that they're on the path to achieve the profitability and that there will be true and real value creation. You can grow and scale up exponentially, but in the end, the business model needs to be scalable and sustainable from a unit economic basis throughout the life cycle. So I think I would just add that to what Hilda also very eloquently mentioned.
Thank you, Hilda and Imran. Does anyone want to add to that?
Yeah, I think I can mention something about that. It's interesting that we're talking about fundraising and raising rounds of capital, but I think we focus so much on looking at it as an opportunity for you to fend off the competition or win against the competition. But I think for especially startups like ourselves, there's a delicate balance between trying to fend off the competition and still the same competition that we are trying to fend off are potential partners. So that balance between building partnerships vis-a-vis considering everyone in the market as a competitor is an interesting balance that you need to think about as you craft your strategy.
Okay, thank you, Leon. And just what you said about partnerships and kind of brings to mind mergers and acquisitions that the likes of MFS Africa have been known for over the past couple of years. And I'm curious to know if that's a better way to expand across Africa than to do it organically, like Paystack or Flutterwave, right? And when payments companies or digital payments companies in Africa are thinking about expansion, how should they think about it, organically or via merger and acquisitions? Amandine, do you want to go for that? Yeah.
Sure. Let me take this one. I don't think there's a right or wrong way. I think we've seen a lot of successful expansion, either organic or through inorganic or M&A methods. Personally, at Paystack, our expansion has been organic driven so far. So we are today live in Ghana, South Africa, Nigeria, and we will be live in 3 more countries this year. Kenya is actually a top priority for us in 2022. But I think some of the things that we would look for are, the quality of the tech, quality of the people, if there are partnerships or if there are integrations or merchants that we could acquire through an M&A deal. I think the trade-off has to be, what is the cost to actually acquire all of this versus just doing it ourselves? And is it more efficient to do it that way versus trying to build product and technology that we know we can control ourselves? So it's also an interesting question for me because, as most of people in this room know, we were actually acquired by Stripe just over a year ago. So yeah, Paystack was fully acquired by Stripe, and I think, yeah, for Stripe it was a way of accelerating their expansion into Africa. I think both Stripe and Paystack are very mission aligned, very culturally aligned, and for us as Paystack, we just saw it as a way of, accelerating our mission and getting to where we wanted to go a lot faster. So yeah, there are two different ways of approaching expansion, and I don't think one is necessarily right or wrong. So it really depends on the situation.
All right, thank you for that. Shike?
Yes, businesses want to expand their reach within the continent, and that is understandable, even from a value creation perspective. But I think before you go ahead to choose which growth strategy you want to explore, you need to look at your capacity and your capability and even the infrastructure that you have at that time. We at Cellulant are present in 18 countries ourselves, and we grew organically. We do business out of 35 countries. But it doesn't mean that that is what fits your organization. What is the capacity that you have? Bearing in mind that something as simple as if you're present in 10 countries, you're going to be dealing with 10 central banks. Do you have a compliance team, that can actually, withstand that? Do you have that process in place? We've also seen that if you then choose M&A, what you're able to do almost immediately is that you're able to access the local assets, immediately, the infrastructure, the merchants, easily available to you from day one. So you can, in that way, accelerate growth, jumpstart growth, if you will. But what we see mostly in Africa is a lot of collaboration, a lot of partnership, riding on each other's infrastructure to at least study the destination market, get familiar, have a good business case, and then probably go ahead and, acquire licenses in that market, grow organically, if you will. But you need like a pilot process, and you can do that with collaboration.
Do you think Cellulant will acquire a company in the nearest future?
It's in the roadmap somewhere. We're not averse to it, but traditionally we've grown organically, and there's nothing bad with M&A. It works. We've seen, like your example of MFS acquiring Bionic, and more recently Bagsy. So it works.
All right.
Yeah.
As an investor, what do you think, Imran?
So Verdant Capital actually advised Baxi on the acquisition, on the MFS transaction. And yeah, it does work. You need to pay attention to culture, infrastructure. How are you going to integrate? Acquiring may be a swift decision or maybe a long drawn out decision, but in the end you have to make sure that it works and it holds true to the strategy that you embarked on. And I also think every market you're entering has its own nuances beyond just infrastructure, but also in terms of consumer behavior, user behavior. In some markets, payments and digital financial services as well as mobile money are not as widely adopted as the rest of Africa. For example, Congo, where I'm actually based, mobile money transactions are far below the African average. Leaders like M-Pesa and Airtel Money are still trying to influence and try to motivate the adoption. And the growth rates are increasing, but perhaps the existing players need some additional support and skills that they may not have or be able to build on their own, and perhaps an acquirer may see that. So, they're following an organic growth strategy, but an acquirer may see that they may be able to leverage that platform. So it's really multifaceted, and you have to take a lot of things into consideration beyond just the acquisition decision. but also the integration.
Okay, Leon, looks like you want to add something to that.
Not really, but now that you mentioned my name, I think Imran captured it very well, that it's market dependent, and it also depends at what stage of the business life cycle are you. I mean, when I look at example like ourselves at Cheaper Cash, we've adopted more of an expansion strategy as opposed to a merger and acquisition strategy at the moment, but that could change depending on our analysis of the different markets. So for the markets that we've already gotten licensed, which is about 5 markets right now, we have mostly just expanded into those markets and sought our own licenses directly from the respective regulators. But it would depend on how we evaluate our business going forward, and I think that's how we should look at it, because as you evaluate, you analyze, and you do your due diligence on the different markets, then you probably would adopt a different strategy. So it really depends on where you are, and also the possibility of actually finding partners that you can buy into or buy off for you to be able to enter certain markets.
Yeah, you just mentioned regulation, and that brings me to my next question, right? So how do you view regulation in the markets you operate in as Cheaper Cash? Is it stifling or is it enabling? Don't worry, you can speak your mind. No one.
I'm not sure how many regulators are in the room, because I could be speaking for several, so I hope I don't step on a few feet here. But it's a very interesting topic, especially for Cheaper Cash, because having gotten licenses in 5 markets now and having challenges in getting licenses in certain markets at the moment, I think we've seen it all. We've seen regulation as stifling, and we've also seen it as an enabler when it comes to the process. And it depends on the market. It depends on how switched on the respective regulators are. But one of the things I think that we have noted is that innovation is always going ahead of the regulator. And I think the biggest challenge that we're having is that our regulators, especially in Africa, have not upskilled themselves enough to catch up with what we are working on, what we are building. So by the time you present your innovation for licensing or for approval, it'll take you such a long time before they conceptualize it, they understand it, they put some resources around it to actually get exactly what you're doing. And we might think, for the people seated here and for us in the tech industry, that, for example, the concept of having a mobile wallet is such an easy concept for anyone to understand. But by the time that document lands on the desk of a clerk or an approver in any of the central banks, then you realize, wait a minute, I may know a bit too much than our friends in that space. So perhaps my challenge, and I think I've had this conversation on so many forums, would be if the regulators would equally invest in having people in their teams that can quickly conceptualize the innovations that we are coming up with, then it probably make the process easier. So I'd say it's 50-50. There are some markets where we've taken barely 3 months to get a license. There are some we're well into a year without the license already, because there's so many back and forth questions, and sometimes your document is simply parked because someone doesn't understand exactly what you're trying to introduce in the market. And if you look at Cheaper, we have a myriad of things that we're trying to do at the same time. We have the cross-border payment option, we are introducing fractional stocks, and several other verticals on our platform. So you have to also deal with multiple regulators. In Kenya, for example, we'd have to deal with CBK, we've had to deal with CMA, and that will be the same for Uganda, it will be the same for Rwanda, we've seen the same in Nigeria, in Ghana, where you have to deal with multiple regulators just to get yourself operating in those respective countries. I think we had an easier time, say, in the UK, perhaps because of how well structured the whole process is. But Africa specifically has been a bit of a challenge, and I think that's where we sit. So I'd not say it's a stifler, an enabler. It really depends on the respective central banks or regulators that we're dealing with in those markets. And I think I've been very modest with my words, because if I was to really speak, I'm hoping that Governor Njoroge and his team are not in the room, because I might say things that might land me in trouble.
Fair enough. Okay, CK, considering you guys in 30-something countries, how have you managed regulatory bodies?
Yeah, Tej, we're probably the most licensed fintech in Africa. So we have a lot of experience when it comes to this. But I want to view the issue of regulation from two lenses, yeah? From the lens of the fintech and from the lens of the end consumer of the fintech products, yeah? And we need to find a way to actually align the policy objectives of both, yeah? And an understanding of what we need to do to align both will actually help us in viewing what we need to do going forward. In terms of what needs to be done, I put them in three buckets, yeah? We need to do more in educating the regulators. One of the things that I hear personally from regulators when they come visiting is they want constant communication, you know, what are the new products you're rolling out? What are the current trends? They don't know these things, and if they have to regulate us, they need to know more about what we do. So we need to do this. The second one is actually more collaboration. I see that a number of countries in Africa are already putting this in place, regulatory sandboxes, etc. I think we have about 6 or 7 countries now with that kind of arrangements. This will enhance collaboration between us and the regulators. And of course, having done these two things, then you then build trust, yeah? So we will understand that as fintechs that the regulators have macro objectives, we have our own micro objectives, but the alignment of both will actually create trust over time. There are other things that needs to be considered as well. So today, I think except for the Francophone countries that have done this very well, where they have the CIMAC and the WEMO countries having the same regulation. For all the other parts of Africa, you go there, you need another license. The fact that you have a license in Kenya doesn't mean you can operate in Uganda, which you can drive to Uganda within the same community. It doesn't mean that you can operate there. So do we then have like this collaboration amongst peers, I mean for the regulators within Africa, so that at least, you know, if you are licensed in one jurisdiction, it makes it easier for you to operate in another jurisdiction. And I think, in summary, we also need to, I think for the regulators, they need to actually employ a risk-based approach in regulating. So if I'm just a technical partner, you know, I'm a fintech, but I'm just a technical partner, am I regulated as someone that is holding value, you know, holding wallets? It shouldn't be the same kind of regulation. So I think with this, we can actually work with the regulators to ensure that we have an enabling environment to operate.
Can I add something?
Okay, sure.
There's something specific that I think is a big trouble when it comes to regulation in Africa, and it's that availability of information. One of the things that you'll notice is sometimes, unless you actually engage on your retainer, a lawyer, you probably will not know what the law says about the specific business that you're doing. And you might find yourself even applying for the wrong license. And by the time you're beginning operations is when you realize, oh, wait a minute, it's not a PSP license that you should have had, it's an IMTO license. Or it's not an IMTO license you should have had, it's an e-money issuer license. So that, the fact that that information is not readily available from the regulators is a bit of a challenge for most innovators in Africa. But I think there's something that Atak said that's very interesting. Perhaps it's time as fintechs we began to regulate the regulator by really engaging. Like, for example, Kenya has the Fintech Association. Could we come together as a fintechs and begin to engage the regulator and begin to find a way of that information reaching whoever is innovating? Because we're in the market, but there are many other people trying to get in the market. But how does that information trickle down to those of us who are trying to set up businesses in the different countries in Africa? So I think that's also a huge challenge. And you'll notice that some of the regulators will openly tell you, we are not partners, we are not collaborating, we are your regulator. So that already is a challenge. So the collaboration and partnership aspect of government does not exist with some of the regulators, of course, depending on which country you're in. So trickling that information, they probably would want to find you on the wrong side of the law, then they deal with you from that standpoint. So it's an interesting balance. It's a challenge that we do have, but maybe the question we should begin to asking ourselves, for those of us who are operating in this space, is how does that information begin to trickle through our spaces, and we actually get that information prior to begin operations, so you don't find yourself on that wrong side.
That's the $1 million question for like the fintechs here. So I think you guys need to like get your heads together and, I don't know, form an association or something. But moving on, right, I'm talking about, aside regulation, how has reception been for your products in the secondary markets you operate in? So that means like the second, the third markets are out of the original markets you started from. You know, since we're talking about payment trace and all that, Amandine?
Sure. So, as I mentioned, I think, sorry, excuse me, Paystack's had a very intentional approach to expansion. So we started in Nigeria. Today we're in Ghana, South Africa. Both of them have been kind of, well, South Africa is going to be a hub for Southern Africa. So we kind of have a hub and spoke approach, which is why Kenya is actually so important for us this year, because we see Kenya as a hub for East Africa. I think the reception in some of these secondary markets have been incredibly positive for us so far. And I think it's because, you know, we come with that degree of intentionality and of building really great products, sorry, excuse me, that is localized for that market. So I think, as many people know here, payments is a highly localized offering. Of course, mobile money doesn't exist everywhere. There's no mobile money in Nigeria, but there is mobile money in Ghana. So you have to really tailor your offering to the local market. I think the early adopters for Paystack have always been the tech community. So we are really building for developers. We've taken a lot of time to build a very clean and easy to use and easy to integrate API, which is also why we're so excited about Kenya, because there's such a massive tech community here. So I think Kenya, we're working on really building a world-class product. We've been working with tier 1 banks and partners. We have a team of 7 already here. In fact, you can probably meet them today. There's a booth just outside the door. They are sitting right here in the front row. But there's actually been a lot of inbound interest. To your question on what has the reception been, there's been a lot of hype and excitement. So we're really excited to be able to hopefully bring a world-class product to Kenya soon, and that would be our 4th market. And I think, you know, just touching on that regulatory question that we were just discussing, our strategy has always been to have a very proactive relationship with the regulators. So I think regulators don't like to be surprised. And so as you think of expansion, it's very important to just carve out a very intentional relationship that you want to start building with the regulator as early as possible. So in some of the new markets that we are entering this year, we've actually been engaging with regulators for over a year, just to make sure that there are no surprises. Yeah, I think that's what I would have to say.
All right, Hilda, would you like to answer that?
Sure. So for GA, Kenya is one of our newest markets. And one of the things I would say is that the reception has actually been quite good. If we consider the fact that in Kenya, for example, it's a very mobile money-led market. And for us who come in as an enabler for both financial institutions, that is banks, and merchants, we've come at the right time, especially where we find banks are now starting to see the need for also having their own footprint in the market and being able to engage better. So you find the attitude towards banks that I have seen in Kenya now is being able to build their own agency model. And also we've come in at a time where they're also migrating from the old Linux devices to more Android devices that are able to do much more. So if I look at the time we've come in and the kind of solutions that we have brought to the market, I would say it's quite timely and the reception has been quite good. But one of the things I would have to say also, our approach to growth has been more organic, very intentional, and not an M&A, I would say that is not off the table, and of course we are looking at the ways to grow. And the other thing I would want to add to that is that for companies who are looking to grow geographically, I've had the chance to start businesses in 3 African markets, and I would have to say it is very, very different. So invest in understanding the market that you want to grow into. You assume a lot, you do your Google search, you have your Excel, and you have shown how you're going to grow the numbers. It's interesting, we've mentioned regulators a lot and market structures. So I have found these are very different. You'll go to a market and find probably how payments are done is through a national switch. In other markets are very mobile money-led, others very bank-led, others are still trying to figure these things out. So investing in understanding the market and how everything works, even before you have set foot in a market, adds a lot of value. But the other thing I would say is that, trust is a process. And if you do not invest in that with your customers, you go into a market, you have to be very, very intentional about, what you have promised, are you delivering on that? And then it's in that process, then you find you're able to build a brand, you're able to build a business that is able to thrive, and even past, maybe if you're the person going to set up that market, that a business that can outlive you when you leave that market. So that I would say would be the approach, and we're excited as Accelerex to provide the services that we have in Kenya. I know Kenya is very different from our parent country, that is Nigeria. But me being a Kenyan and having looked at how Nigeria has done the market, and looking at the kind of, for example, the small merchants, the kind of solutions they would need to be able to be integrated with the banks and for them to be really known by the banks, because financing for them is still a problem. But how are we making sure that we are integrating their business to the banking world and being an enabler for them? So that is what I'm looking to achieve in this market, and we are very excited about that.
All right, thank you, Hilda, for that. So rounding up and looking at how the payment space has progressed over the past decade, and we've seen, innovation in card payments, in mobile money, right? Telco-led, bank-led, fintech-led, and the likes. Would you say that the payment space is where it needs to be at this particular moment, or can we do better, or should we be doing better, right? And also, what lies ahead for the space in general, and the companies seated here and others? I think Amandine can go.
Sure. When I think of the last 5 to 10 years of payments in Africa, I think there's been a lot of progress, there's been a lot of innovation, but we are still really just scratching the surface. Africa has 17% of the world's population, but only 2% of the people transacting online or actively engaged in e-commerce. So the gap is still very big. I think there was 4 billion of VC funding that went into Africa last year, 2/3 of which went into fintech. So there's still a very big problem that many companies are working to solve, and there's still a lot of appetite from investors to back those companies. As I think of the future, one of the ways that we've kind of thought about it at Paystack, so when we're trying to just empower merchants to grow African merchants to grow their business, we think about facilitating payments within a country, between or across the continent, I should say. So within a country first, like within Nigeria, for example, across the continent, so between African countries, and then between Africa and the rest of the world. And I think a big part of that is going to be how do we facilitate cross-border commerce, because within a domestic commerce or e-commerce enablement, the next step is kind of cross-border. And it's a shame that when we see just international trade on the continent, the largest partners of African countries continue to be China or Europe or Africa. And yes, there's a space for regulation or free trade agreements to try to facilitate that, but payments actually plays a very important role. And I think as we think of that cross-border being kind of the next frontier of payments on the continent, it's up to us payment facilitators to enable payment methods that customers want to pay with or merchants want to accept. And some of that may come in the form of crypto. So I think we've been seeing the rise of crypto in the last few years, particularly on the continent, either as a store of value or a way of hedging against currency devaluations, but also just to move money around. It's frictionless, it's much more efficient than some of the more traditional methods. And so I think it's the responsibility of payment aggregators or PSPs to try and reflect that. So it's something that we're thinking about and that we will engage stakeholders and regulators on. I think Stripe is also being very proactive in thinking about how they use crypto. But I think the next wave is really how do we enable kind of a global payments and treasury network to just make cross-border payments and to facilitate cross-border commerce as easily as possible. So yeah, I think it's exciting. I think there's been a lot of progress in the last 10 years, but we are really just scratching the surface. And I think this is probably one of the most exciting spaces in tech in Africa because the innovation will just continue to grow.
All right, Leon. I mean, you guys run some crypto stuff, so.
Before I talk crypto, again, because my regulator could be in the room, direct answer to your question, first of all, is Africa where it should be at the moment? I think it is. I think we're exactly where we should be as far as the continent is concerned. 10 years ago, tech summits were not even a thing. I was the first head of digital payments at Family Bank, and that's a role I took up in 2016. That's really just 5-6 years ago. So I think as Amadina said, there's been a lot of investment in terms of the infrastructure. There's a lot that enables us to churn innovations and to provide solutions in the different parts of Africa. And I think that's a real deal, that there's no shortage of problems to solve in Africa, especially financial problems. If 2/3 of all funding is actually going to fintech, that tells you something already, that the movement of money is extremely important, and it needs to be innovated around, because we're basically innovating around the lives of Africans. And I think the other thing that we need to constantly think about is that actually, are we innovating around the lives of customers in Africa? And if we are, then we are on the right track as far as I'm concerned. About innovation, things such as crypto, again, that takes me back to the discussion on regulation. There are markets where you can facilitate crypto trading because the regulator does not have, either there's no law or the regulator does not have an issue. There are others where where it's clear as night and day that you cannot touch crypto. Kenya is one of them. I think there was a directive in 2015 to all banks that if any bank is handling any company that is trading in crypto, they risk losing their license. So if you can't partner with a bank, then really how are you going to operate? I think it's Nigeria just last year that also made it very difficult for crypto trading to continue. And you see so it's a little of you go 2 steps forward, 2 steps back. But in terms of how far, if we look at how far have we come from 10 years ago to now, I think there's significant progress in the continent. There's huge opportunity to solve problems, and it's just positioning ourselves correctly as the people in that space to drive those innovations and to make the changes that we need to see as far as the providing solutions to customers is concerned. Yeah.
Thanks for that, Leon. Does anyone have anything to add?
Yeah, I'd just like to add to what my fellow panelists have said. I think the gap is large, as Amandine said. There's still a lot more to do. We are where we should be. We've come a long way. I think further progress and a faster pace of growth is dependent somewhat on regulators and how they interact with the regulated. You know, we have to foster the understanding and collaboration to balance the needs of having a sound system and reliable and services to the users. And I think there needs to be perhaps not necessarily upskilling, but regulators need to transition from what was traditional financial services and banking to what is now fintech, and it has the rapid adoption that is taking place across the continent. And furthermore, I think with regards to crypto, it needs to be seen how it's going to unfold on the continent, because a lot of the decisions that drive regulation on the continent are driven by decisions that are made off the continent, by the larger financial powers that drive the overall international banking system and settlements of payments cross-border, cross-continent. So I think there will be some influence, and regulators will need to, look at their respective markets from an independent perspective. But if a country needs to remain connected to the global banking system and global financial system, then there are considerations to be made on what is happening off of the continent. And I think that question is still up in the air. We won't have an answer yet. It can go either way, but one thing for sure is there will be some form of crypto underlying the financial system and payments in the years to come. It's not very visible or clear yet.
Okay, thank you. Hilda, Shike.
I would like to add to what actually Kiptun said. I like the fact that one of the things that has come out of the discussions that we've had today is around regulations a lot. So I think we need to be more intentional. And I also believe there's still a lot of problems to be solved in Africa. So we can't say that Africa as a continent has been exhausted, and it's very fragmented. So it's also figuring out how do we work then with the diversity of the African continent as it is, with the different markets. We have to look at those problems and how do we solve them, and the opportunities are there and they are big. I would also say I hope to see more collaboration. Let's see where we could work together. You do not have to reinvent the wheel, and if there's an easier way to expand, let us see how we can work together as fintechs, and especially when it comes to engaging the regulators. That is very important. And I'm sure Kipton is saying that because of the Kenyan market. I think that is one primary need that will come out of this summit, that we need to see how do we come together and address this. We make sure that the regulator becomes our partner in business and become an enabler for us. Yeah, that's what I have to say.
So just speaking about the internal process of what we're used to today, we're seeing a lot of merchants, beginning to demand that they, preferring to be settled in crypto. So as a B2B business ourselves, we need to be thinking about our treasury arrangements, our settlement arrangements. If you talk about a few years back, we didn't have, those kind of requests coming through. So as fintechs, I think we also need to, prioritize the way we work today and actually evolve with the times.
All right, thanks for coming on this panel session with me. I didn't have much to say, so you guys did most of the work. I hope you guys enjoyed the session. Thank you.